Hello, and welcome to your Daily 5. My name is Greg Harmon. I'm the founder and president of Dragonfly Capital Management. At Dragonfly Capital Management, we manage client accounts in separately traded accounts held in your name at Interactive Brokers. We do this using technical analysis and options overlay strategies to minimize capital at risk and maximize return. We also sell a newsletter for those of you that like to trade your own accounts and are looking for insights that can help you do so. Find out more at dragonflycap.com. Today, I'm going to spend a little time digging into what they've been called the FANG stocks, but I'm replacing the N in FANG, the Netflix, with M in Microsoft. And I'm having a hard time pronouncing this, so let's call it FAAMG. Doesn't roll off your tongue like FANG. But these are stocks that I think are ready to go after months of pretty much doing nothing. So let's take a look and see what we think. First one, Alphabet. Alphabet, you can see since the pandemic low in March of 2020, has had a pretty good run higher. And if you have a long time horizon, you may have been able to capture that at a price of 1,008 at the bottom and still be holding it at 2450 right now. As a reminder, again, all of these charts are as of Friday's close. This stock itself, Alphabet, is doing all right this morning, doing okay. I have Fibonacci retracements and extensions drawn on here today because it's one stock that has done very well if you look at the extensions. And the period that I'm looking at extending from is the retracement of the drop from the high before the pandemic to the low in March of 2020. So we see here that we got a full retracement here in July of last year, and then a pause at the 138.2% extension, another pause at the 200% extension, and now we are testing again at the top and a little bit of consolidation here at the 268.1% extension of that retracement. Momentum is currently a little bit against us here, pulling back, but you could also look at that as being a reset as it's going through the consolidation, with price actually not falling, not moving much, still staying above its 20-day moving average. So I would look for this one in the short term to start picking up. And maybe it takes the catalyst of the July earnings reports, or maybe it happens before that and runs up into it. But certainly a move over 24.55 puts this as a buy. The next stock, Microsoft. This one has also been a great stock for the last year and a half, coming off that pandemic low. And we see that it came out of a symmetrical triangle back here in January this year, came back and retested like we see in all the textbooks, and then started moving back higher again. Made a high in April, came back right around the 50-day moving average area, and reversed back again, and is now back approaching that high again. In today's morning action, it's actually up and making new all-time highs. So Microsoft. Another good one has been Facebook. Facebook came into a long consolidation here from August through to the middle of March. So a really long time in consolidation in this descending triangle. Also broke out of the triangle to the upside, came back to retest it, and has been marching higher since. Now in a bit of consolidation, resetting the momentum a little bit lower as it hovers here just under 340. One that we're really watching closely now, though, is Apple. Apple has pretty much done nothing since September last year. So we're coming up on 9 months of this now. But as of January, started making a tighter range and started building more into this symmetrical triangle. And as we're coming into the week and coming into the end of the quarter, is now looking to approach the top of that triangle with a potential breakout here. If we do get a breakout, if we want to play it conservatively and say that it's maybe about 115 to 145, so a $30 move, maybe up to 162. Those of you that price this more aggressively might think that this is the beginning of the triangle back here at September, and give it another $10. But either way, a breakout of this tightening range, and it's getting really tight. Looks to be something that's potentially ready to happen soon. And what has been the worst of the FANG stocks since the pandemic has been winding down. Amazon. Now, here it is Prime Day, and we've got the opportunity for the stock to start breaking out of a range that it's been in for about a year. We're just a week shy of being a year in this range at this point. What's happening with this one today? It's not breaking out, but it's been teasing us a couple times. We had a tease here back at the end of April, and it's coming up to close to a tease now as these Bollinger Bands are widening out with momentum building. So here we have, it's about 35.50 is the top of the range here, and a break over 35.50. As they say, the wider the base, the higher into space. An 11-month base should create a pretty big move once it breaks out of this range. So many of you have not been watching the FANG stocks for any amount of time since they've been so boring over the last anywhere from 3 to 11 months. It's time to start watching them. And we know that we all have catalysts for each of them coming up in the next 3 or 4 weeks with the new earnings season coming in. So keep them back on your screen and put them back on your radar. Be ready to go. That's my Daily 5. Thanks for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.